Hi everyone and welcome to today's morning report on Monday the 21st of March with me, Rich Pair Market Analyst at Handtech Markets. European trading sessions fairly settled, nothing too significant in terms of direction, slight gains more seen on the DAX. But what we have seen is a bit of an oil price driven move around on the markets today. Just show you first of all the oil price, which today sort of fell away in sort of into the close on Friday on the back of a slight surprising uptick in the Baker Hughes oil rig count by one rig. That's the first time in 3 months that the oil rig count hasn't fallen, and that sort of saw oil price under a little bit of pressure today, but it's rebounded slightly. We've seen a slight improvement generally in risk appetite following on that Fed meeting. But you can see here that the Treasury yields are basically settling down a little bit now. Not too bad in terms of downside. And the dollar has started to reclaim a little bit of lost ground. That has generally come through cable, which has started to fall away quite sharply. About 0.5% lower today, so slight gains on that on the dollar on the back of that, but nothing too significant in terms of movement in the euro. In fact, it's actually just gone positive, and dollar yen also is fairly well settled, but it's a public holiday in Japan today, so we're sort of reasonably settled down actually in the outlook for these markets today. Nothing too significant in terms of direction being seen. There's not a great deal of data out at all this week. You got the US existing home sales, which are at 3 o'clock today. Oh, sorry, 2 o'clock today. Still got that US time difference change anomaly, and that's expected to come down to 5.34, which is about 2.2% decline actually, but still pretty elevated levels, aren't they, on the housing sales for the States. Nothing too significant in terms of the decline there, so still pretty strong house price indicators we're getting out from housing market indicators we're getting out from the States. So that takes me to my chart of the day, which is the dollar Swissy. That's not dollar Swissy, is it? That's gold. Dollar Swissy, here we go. Right, so dollar Swissy had this fall away on the back of the Fed. Big, I mean, look at that bearish candle there. That was on the ECB. Then bearish engulfing candle again on the Fed. Strong downside. Having a bit of a snap back, bit of support coming in, but again, I don't really see it as being overly sort of holding. I don't think this support is going to hold for particularly long. I think there's been a bit of a change of sentiment really on this dollar Swissy chart, with that uptrend channel broken now. You're getting sort of sequence of lower highs forming now, and I think these two, now the two sort of the ECB's out the way, and the SNB hasn't moved, and also the Fed has changed to a more dovish stance. I think that should generally tend to strengthen the dollar, the Swissy, and that seems to be putting pressure down on that support at 96.50 area. 96.50 was the reaction low that we saw on Thursday, following on from the Fed. Slight bit of bounce on Friday, but a little bit of a recovery today. But again, I'd say that any sort of rebound now is a chance to sell. You've got this resistance in place, 98 figure. It's formally supportive throughout December, and then became a floor again a couple of weeks ago, then broke on the back of the Fed. So I think that that is a pretty key resistance now, 98 figure. You can see that significantly held on a couple of days in a row, and then bang, it became then the basis of resistance on this hourly chart, didn't it? So I think anything back towards there is a chance to sell 98 figure. You got the initial resistance coming in at 97.30 today before a slight bit of a correction. But looking at the hourly momentum, you can see that it basically is just unwinding, isn't it, back towards that neutral MACD line and then gives you a chance to sell. You've got the RSIs back towards 70 and falling over, so you've got more negatively configured momentum now on this chart generally, and I think rallies are a chance to sell. I think you're going to see further pressure on the 96.50 area, and certainly if that breaks down, you'd sort of be looking at the October lows again, 94.75 area. So there is downside potential in this chart should it break that 96.50 support. So I wish you good luck in your trading today, and I will speak to you later. Thank you.